and then we're gonna at the end start going into where we're going for the next model. And just feel free to interrupt, ask questions how you see fit, and all that, right? So the purpose of this is like any strategy, like you need to really focus on can it hold its test of time, right? And if that strategy can hold its test in time, then I should be able to look all the way back to 2007 when the pricing model started shifting a lot more detailed towards algo-based workflow process for order pairing. Not so much like the markets were algo-based, but at that point around that time frame is when we started saying we don't need a market maker anymore. We don't need this anymore. We can start algoing this, and we don't need the physical body there anymore, right? So the purpose of any test that I do is like to go to 2007 and just collect data. And we're already at 50%. We've already hit 2,000 reps on this. What I'm about to explain to you, and we might like for anybody, it's good just to get data collected that is free, and just to see if there's an edge behind that strategy. And then position size and all that stuff, right? And then you forward testing live market conditions so you can truly understand and perfect the execution piece of it, because like doing the slow motion back testing, anybody can do that, and then come out here and just smoke themselves in these markets, right? Because like the volatility just increases when you're in a live trade, and especially at 9:30 on the NQ. It just goes from like 10 handles to 20 handles to like 50 handles within seconds, right? That might be a little bit of an exaggeration, but like that's why we forward test after we back test. So we back test to do a couple of things. We want to find our risk profile. Like number one, we want to find, does this strategy have an edge that can last throughout time? And in that edge, what are the expectancy ratios that if I can learn how to control my portfolio volatility in correlation with that strategy, can I start relying on the expectancy weekly ratio, monthly ratio, et cetera, so I can start relying on that for additional income or whatever, right? And then we also back test to figure out, the little nuances and confluences that give you more strength or weakness towards market conditions in that strategy. We back test to build that risk profile to see, how close do I get my stop to my entry and how far out do I take the target, right? And then we forward test to perfect that once we've got those questions answered. So with this one, we picked the 9:30 NQ because it's one of the most volatile times that you can face in the markets, right? But if you study it hard enough, you'll see that it's very much controlled chaos, right? The amount of work, because of the amount of workflow operations on the backside of what it's representing, it has to be controlled chaos. So with that being said, knowing the workflow operations that's happening behind the curtain is cool bar information, but it doesn't make you consistent money. But a repeatable rule-based process and proper position sizing will, right? So that's the thing that separates educators, smart people, and professionals from people who consistently make money is their ability to take that complex situation like the 9:30 opening range and see it in a way where it simplifies it on like how can I take advantage of this so-called edge that I think is there, right? And we're going to do this by building a simple plan because of the speed that the 9:30 moves, right? We built a simple plan that we can track in live time, and we can keep on pairing in live time, and it is based around sound fundamentals, right? Which we'll discuss. So we know that every candlestick has an open, a high, a low, and a close price, and it's associated with some sort of time frame. The 9:30 to the 9:59 is no different. And during this time, you're trying to synchronize with 6 5-minute candles, 2 15-minute candles, and 1 30-minute candles momentum or trend or whatever distribution, whatever you want to call it, right? And this time frame from 9:30 to 9:59 is also the closing time for the 6 a.m. to 10 a.m. H4 candle and the 9 a.m. to 10 a.m. H1 candle. So what does that tell us? Just like the Thank God It's Friday strategy, that's like people trade to capture that closing price of the weekly candle. We're doing the same thing. So during this time frame, we can anticipate inversion to the mean behavior, or retracement from the H4 distribution from that H4 candle that we're currently in, the 6 to 10 o'clock, right? One, we want to do this to capture that momentum and volatility, and we want to do that through a predictable pattern so we can trade these conditions, right? From a directional approach, right? And then we do this by trying to find that false move Judas, right? We know that each candlestick has a wick, and then the body goes in the opposite direction. Like we're just trying to identify where that false move is, or that Judas is what some people call it, on that M30. So from 9:30 to 9:59, we're trying to capture where that Judas is so we can enter, right? Yeah. So with that being said, like now we know that those wicks, so like I use the wick of a 30-minute candle, right? Like the wick of let's say the 30-minute candle goes long, it's a long, right? We know that that low and that open price of that long 30-minute wick candle, I mean, if we jump down to a low time frame, we'll be able to see a pattern or reversal. And there's two typical smart money reversal patterns, right? You've got the breaker delivery sequence and the failure swing, right? So like if you look on my screen, right, we know that this is a lower time frame view of what we're trying to capture. But if we just looked at one candlestick on the higher time frame, let's pretend like this is the open, the high, the low, and let's say this is the close for the 9:30 to 9:59 candlestick. We know on a lower time frame we'll see something of this characteristic, right? And so we're trying to, like I said, capture that Judas. And how we're going to do that is by using the 9:30 candle. Okay, so let's go over the breaker and failure swing because I need to make sure that you know what that is, right? So you're moving up, and you have a high, you have a low, you have a higher high, and you have a snap. and then a return, right, to fair value, right? The failure swing is we're moving up, we establish a higher high, we establish a low, we establish a high, and then we fell and we snap and we return to fair value, right? And the same thing goes the opposite direction, right? So are you pretty familiar with institutional swing points, which is a 3-candle pattern? And okay, and you're familiar with breakers and failure swings, right?
Yes, that's correct.
Okay, sounds good. So the thing that we're trying to do though is we are going to see if we can categorize the 930 candle on the 1-minute chart into where in that reversal pattern we are at, and so we're trying to utilize the 930 candle on the 1 minute to figure out where the structure is and where within the structure that 930 candle is, right? So this is an example. This is a gap chaser. This is that snap. This is that displacement. This is that momentum. This is that market structure shift, whatever you want to call it. But at the end of the day, I call it a snap, right? That's saying this was the Judas, right? And so like if this is the 930 candle, we would identify that as the gap chaser, right? Now there's not a fair value gap that's required with it. And we'll go into that when we look at the examples, because this is the most chaotic and controlled chaos time of the day for the markets, right? Like the 931, this gap chaser can come and perform, and then the 931 can return and fill in that, inefficiency, but it doesn't take away from the fact that that inefficiency is there, right? So like if the 930 candle was this leg up, the manipulative leg, the soup leg, the false move, or whatever we want to call it, the higher high before the snap, if this was the 930 candle, we would consider this the macro soup. Now let's say this leg is the 930 candle, we would consider that the pre-fill. And then the same thing goes with the failure swing. If this failure swing was the 930 candle, that'd be considered the macro soup. If this was the 930 candle, that'd be the gap chaser. And if this was the 930 candle, that'd be considered the pre-fill, right? Now let's talk about certain things that we want to do. Let's talk about how. So we said there's 2 types of reverse points in the market. There's a breaker and there's a failure swing, and we broke it down into like open, high, low, close, and using the fractal time frame of time to target the specific 930 candle to categorize the 930 candle is going to confirm where we are within the structure and what structure we're going to base it off of. Now we're going to have something to confirm the structure confirmed from the 930, and we're going to use the 928 and the 932 candle to do that, right? So regardless where we are within the 930 candle, whether we're in the 930 is a macro soup, a gap chaser, or a pre-fill, like we're going to confirm the direction of the trend and that this is the correct Judas based off of the relationship of the 928 and the 932. So if the 932 is below, in this case, the 928, that confirms that the 930 is correct, right? And then, but if the 932 comes up and swallows the 928, it confirms that this is not the Judas right here, that this is actually the Judas, and we need to start looking for the longs, right? And then obviously, the last part of it is like we want to make sure that we're sellers in fair value, not fair value gap, but we're sellers in fair value, like in premium. And if we're long, we're buyers in discount based off of this manipulation leg, which is the Judas and how low it went. We want to be sellers up here because there's 2 types of data risk out there. I mean, there's 2 types of risk. There's price risk and there's data risk. If I was buying here, I would be facing data and price risk, right? When the snap happened, then we don't have data risk anymore, but we have price risk. I wouldn't be a seller here. But that return to fair value alleviates the price and the data risk, right? Because you can sell here, but did you position size too heavy? And this little move back to fair value is going to like margin call you, right? So that's how we use the 932 and the 928 to confirm what the 930 is telling us. And the 930 is confirming where we are, what the structure is that we're looking for, and where we are within that structure, right? So with that being said, let me look at my notes to make sure. Okay, how do we use 910? How do we use the 850 to the 910 macro and pre-market, to tell us where we're at? Like the 850 to the 910 macro, we know that this acts as like Asia range, right? It's engineering liquidity, it's engineering a float, so that at 930 when volatility is injected into the market, it's going to go up there and grab the volatility and reverse, or go down and grab the volatility and reverse, et cetera, and then it can order pair and do what it does and continue the trend, right? So what we're paying attention to and what we're doing from 911 to 929 is we're just paying attention to the clues to see what is the market telling us about like where it wants to go. Like, is it telling us anything specifically? Like if it continues to reject from the CE, right, of that macro, then we can anticipate, depending on the closer we get to 930, like that it might want to come up there and wipe out that liquidity at the CE. Or if it's like refusing, like in this case, to get above the high or the low, but like we finish at the equilibrium, we can confirm that the 930 is going to give us the Judas, and then the 931 is going to tell the story, and the 932 is telling the story of where we need to be entering, right? The one thing that I taught them is like the 925, going back to this slide right here, the 925 to the 929, right, can be that Judas. So if you think of a higher time frame, every single 30-minute open doesn't just Judas down or Judas up and then take out the trend, right? So we have to think, like, is the Judas going to happen to tell us where we are in structure between 925 and 929, right? So if the 925 and the 929 is clearly trending up like this, right? And then 930 comes down, 931 is failure swinging, and we snap, we can anticipate that the Judas happened in pre-market. Or let's say this is 925 to 929, and this is the 929 candle. Like, we can anticipate that this could be the Judas, but for that to be confirmed, the 930 has to snap and break market structure, right? So it's important to pay attention to the 925 and the 929. Is it a trending environment? And then, like, if it is, like it is trending, then we need to see a snap to confirm where we're at, right? And then, so moving on, like, do you have, let's see. So this is an example of, this is the macro soup. We've got a high, a low, trending environment between 925 and 929, right? This isn't trending, right? This is consolidations. The fact that we haven't left the macro high or the macro low up until now just shows that we're engineering liquidity. So before 929, in the back of our mind, we're anticipating a Judas. It comes up, it runs any liquidity in pre-market. And then the key indicator is the 931, that this was a soup because the 931 stalled out, right? And then it went below the 930, but that's not a snap, right? Like I need to see a snap. So we're anticipating that the 932, snaps, the 932 fizzles out and just closes within the 928. So right now, we have a pretty damn good indication that this is the Judas, but we have to wait for that snap, and we get that snap right here, right? So that's that one.
Quick question. I see that you're drawing out the 928 candle. You also got a CE there. Can you talk about the use of, putting a rectangle across the entire candle for the 28?
Yeah, so I go high to low of these time clusters, and all I'm doing, like, which we'll get into on the 945 smooth transition part, like all I'm doing is seeing price delivery around that area. Like, is the wicks going above that CE and the body's closing below it? Like, it's just a measurement of strength of price action. You know what I'm saying?
Thank you.
Yep. Okay, so this would be the macro soup. Same example. I think actually this one took out pre-market, but then you see 925 to 929 is just chopping. It's not really consolidating. 930 opens, it wipes out pre-market liquidity, sell side, snaps up, takes 931, right? 930 was a gap chaser, but 931 is the key indication that it like came up here, looked left, grabbed that liquidity, and then closed low. The 932, just started snapping down, snapping down, snapping down, snapping down, and then engineered liquidity here, fair value gap, return to, sell it, et cetera, et cetera. Right, and then that's macro soup. This is the macro soup. Cool. All right. Okay, so the gap chaser, right, is when the 930 explodes. In this case, it does create a fair value gap. We look, oh, this is another thing. Like when you look at pre-market liquidity, you always have to think, like, is it too smooth? Is it, flat? Like, are there relative equal lows? Like all that, because you can anticipate price will come back within the next 10 minutes, wipe that out, and then reverse and go the other way, right? So in this case, the 930 is a gap chaser, all right? Because it exploded up, 931, 932, like there's nothing to the left that is trying to run, so I can anticipate this is a true gap chaser because this liquidity's been taken out, that liquidity's been taken out, that liquidity's already been taken out, and it continued higher, right? So it comes back down, wipes out this liquidity, and then goes in the right direction. And then the last one we'll look at before moving on is the pre-fill, right? You get a fair value gap, you get an explosion, 930 comes in, fills in that, and then continues higher. So this is like, I think on this day, we exploded higher, and then we came back down. I don't remember specifically. Yeah, but anyway, you've got the high, the low, the low, the high, the failure swing, or you can look at it from this. You have the low, the high, the low, the snap, all within the same candle. It returns the fair value, and you take entry, or you take entry when it comes. This is the 931 fixing all the inefficiencies of that gap chaser. So while it is coming back down, you're looking for a position, right? And then what you're doing is like where your target's at and all that. Like what I'm doing and what we're testing right now is should we be using the standard deviations from the macro or the manipulative leg, right? Like if the either way, like the manipulative leg, right? What you want to do is you want to take partials at 2 and then leave a runner for 4. And in this 930 strategy, we're not moving stop losses. Like it stays below the key structure, and that's that, right? And then let's go to the reversal, which is the phase 2 of it all. And this one we're currently building, so bear with us. Right, we haven't even started testing this one. But do you have any questions about the 930 yet? Oh, the last thing I forgot to tell you is when you hear about time clusters like the 430, the 705, the 55, like all we're trying to do is utilize time to net the Judas. So just like throwing a football into a net and it goes in a little bit and then retreats out, that's all we're trying to use is like lines in the sand that don't change to say, hey, did this 928 capture the Judas? Did this 855 capture the Judas and like it went below it or through it and then closed above it, right? Like you're trying to think of it from that approach to add more confluence. And then the last thing is like this right here, we're also paying attention to, the range of the average opening range over the last 10 days from 930 to 10. Like where are we within the battlefield, right? If it's 937 or 935 and we're already at 100% of the range, we can anticipate a reversal, right? Like we can probably go in and take some partials and probably go in and, think about leaving just the runner on the table because you've already moved. So the delta of the move happened so fast that it might not be worth staying in and keeping that exposure risk until 959, right? All right, so let's talk about like how we're going to be looking at the 945 to the 1010, right? Because after 10 o'clock, you've got a new H4 and all your trades are trying to capture the momentum of the H4, the distribution of the H4, right? The silver bullet is trying to capture the distribution. The DR is trying to capture the distribution. Captain Backtest is trying to capture the distribution of the most the one H4 candle that historically has moved the most throughout the day, and that's the 10 o'clock to 2 o'clock candle, right? But right now, we know that 930X is like a reversion to the mean kind of game because it's closing the last H4 candle. And so we have to prepare, for that reversal, for the closure price of that 6 o'clock to 10 o'clock H4. And this is how we're going to start testing it out, right? Can you see my screen just fine?
See the PDF now.
Yep, it's a PDF, right? Holy shit, who was that? Okay, cool. So at 9:45, draw the vertical line, right? You have gotten through one 15-minute candle of the two 15-minute candles of our trade plan, right? And now you're thinking in the back of your mind, if a reversal is going to happen, it's usually going to happen between 9:45 and 10:10, right? And so what you do is you draw that out. You're going to put on your 4 o'clock candle, your 5 o'clock candle, and your midnight candle, right? And you're going to see if you can line this up, right? This actually happened on Friday, right? Like at 9:45, where are you in relationship to these three candles, right? And where's the previous 5-minute low, which is right here, right? And then you're going to say, where are we within that average daily range from 9:30 to 10? What, 90%, right? And then you're just paying attention to price, right? So like right here, this doesn't tell us anything. This just says it took out the previous 1-minute bar, right? We could just be going to the C of this fair value gap. We could just be going to this order block. Who cares, right? Now this is where the macro is going to come into play a little bit more, right? Like, is that 405 lining up with that key fib level, 2.5, right? Is it lining up? In this case, it is. So that's step 2 of finding this reversal, and the fact that we're at 90% of the range at 9:45 with 15 more minutes left in the game for this range. All right. Now we're going to turn off electronic trading hours, and we're going to sit there and we're going to, see, did this gap up? If we have a gap up from 16:15 to 9:30, and we ran the first 15 minutes, at 9:45, we can anticipate this is going to be what the reversal is, right? And then you're going to fib that 2, from open to close of that gap to see if that lines up with the macro fibs and that, 4 o'clock, midnight, or 5 o'clock price. And then from there, you're going to pay attention to the 5 candle. You're going to look at the 9:47 candle and see if it does the same thing we did with 9:28 and the 9:32, right? And then you're paying attention to the structure, and you're paying attention to that previous 5-minute, the previous 15-minute, low and high, right? To see, have we broken below that to confirm the momentum of that reversal, right? So in this case, you have a high, a low, rejection, 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 failure swing, and then the snap. Now we're going to find out where fair value is from this failure swing down to here. And this is going to tell us at this point, if you're long at 9:30, you should probably go and close all positions, right? And think about, taking a short, placing your stop up here, right? That's what we're testing so far. We just built this today, and like we're going to build the reversals like this from 9:45 to 10:10. I'm going to test this, and then all the ones that have a continuous trend into the next H4, we're going to start observing it for characteristics that we can build a model around, so we can stay. That will tell us, can we stay in our 9:30 trades, and then use the silver bullet cap and back test or DR to add to our positions to capture that trend. But what are your questions so far? I know there's a lot of information.
Yeah, I was going to ask. Yeah, I was going to ask, is there any way that we can pop up today's price action and see how the 9:45
absolutely
model would have played out? Okay, thank you.
Okay, so let's look at this. Let's start off with the 9:30. Right, so the 9:30. Right, where's my 9:30? So this is the 9:28, 9:32. Okay, so this is the 9:28 candle right here, high to low. Right, we were trending condition from 9:25. At this point, we haven't taken out any side of the macro, and so 9:28 comes. 9:28, 9:29 starts like slowing down. At this point, if this is going to be the Judas right here, it needs to snap right now. Like 9:30 needs to be a gap chaser to the downside, right? If it doesn't do that, I'm anticipating a Judas above this liquidity, right? Or a gap chaser to send it flying, right? So it opens up, it comes up, it closes within the 30-second opening range of the 9:30. 9:31 stalls out, runs the liquidity, rejects off that 4 o'clock price, rejects off of this 5 o'clock price. So we have a high, a low, a failure swing, weak ass snap, which is why like my stop was above here. This is a weak snap, comes back up, rejects, I sell again, and then I just target the previous 5-minute low. Now let's look at, let me make this one screen. All right, so now, because like I didn't take this trade, but I would have, but I have a mandate right now that I can only trade what I'm teaching the students. But like, so now let's track the 9:45. So this is the 9:45, right? Now the telling sign on this was it drops lower, it drops lower, it drops lower, establishes a breaker right here, right? Sweeps this liquidity right here, right? And the same time this was happening, YM, and I was on the net with the kids, with the students, the YM had taken out its previous H4 highs, ES was flatlined, and this was going lower, and then it snaps out of this breaker, right? We're nowhere near a 4 o'clock price, we're nowhere near 5 o'clock price, and we're nowhere near midnight price, which is on here somewhere, up here, right? So what does that tell us? Like, we've got to pay attention to, like the structure in this case, right? When we saw this snap coming back up into the 9:30 opening range, right, we needed to pay attention, right? We snap out of it. We leave a volume imbalance there. We leave a volume imbalance here. This is your fair value. From high to low, once we snapped, it comes back to 50%. It continues higher. Now, at this point, this is the actual point. If we look at, SMT, the YM was already up here. The NQ was heading lower. And that's when we identified, like, this CE, which I'll point it out, and it happened on the other screen. And we knew that ES was just right here flatlined. We knew that at this point, right, during this time, this was the NASDAQ, all the other indices, the ES and the YM took out their Asia liquidity at like 4 o'clock in the morning, and Q was the shrink leader at that point. And so there was an SMT between the liquidity distribution that was happening. And so like the whole purpose of the NQ coming down here and wiping this out right here was to wipe out that like session liquidity, right? And so like how I saw it, right, let me go to the H4. Is that like, this was the, give me 1 second. All right, I'm back. So the liquidity, okay, let me erase everything so we can actually see it, right? So with this NQ was heading down, where are we heading to? We already have an SMT on the YM. Like the next PD array on the higher time frame is the CE. So going to the lower time frame, right? Where are we? Where is that? So this was like right here when it was happening. Where is it targeting? On the 1 minute, it's targeting this volume imbalance right here. It comes down here, it rejects. Does a smart money reversal? Like you got a low, a high, a low, low, a snap, a market structure shift. It's a shitty one, but it's still one to pay attention to. We've already returned to this 50%, right? So now, to confirm this, we need to see if we return to this 50%, we fill in the CE in discount right there, and you can along that thing either there or either here, right? And that's that reversal we're talking about, like, that is very much you need to pay attention to. Now, this is going to happen more than it's going to be a continuous trend day, right? That's why I'm like, take partials at 2, leave a runner, because a continuous trend day, like, is going to continue trend, right? This was obviously a holiday too, but the structure happens like this a lot. Hopefully that answered your question.
Yeah, thank you.
Yeah, when I look at SMTs, number one, my Dillon range, how I do Dillon ranges, no matter what time frame I'm on, did it take out some kind of session liquidity or some kind of liquidity? Institutional swing point, sell point right there, sell side right there. Is it fixing the inefficiency? Volume imbalance right there, SMT on the higher time frames. So now it's all about let it expand. I want to see displacement, and then I'll buy, in this case, in fair value. I'll buy in fair value, right? Like, you've got to think that way. That'll save you a lot more money. And then when you're doing strategies like Captain Backtest or Silver Bullet, you can get juked out real fast in a hurry. That's why when it's a momentum based, not a reversal based trading style, you let the 5-minute candle, take out the previous 5-minute candle in the direction. You pick up your bias because like Captain Backtest, for example, whenever the 10 o'clock and beyond takes out the previous higher low, the previous H4, that's our bias for the rest of that time period. But like we're not coming into the game until the 5-minute candle is taken out, the high of the previous 5-minute candle is taken out because we're trying to capture the momentum, and you can get juked out really fast in a hurry. So like understanding, are you trying to trade distribution and momentum, or are you trying to trade reversals, right? And they both have different ways you have to enter to be successful long term. That makes sense? And like I'm pretty sure Alan recorded this, so like
it does. Yeah, I actually saw some of this in the previous video, so it definitely helps out. So thank you for that.
The biggest thing is during testing phase, right? Like stick to the we have to be aligned. We have to test to make sure the data is clean, right? And then like when you trade it yourself, you can use order blocks, you can use this, you can use that, you can use whatever kind of confluence you need. But like for testing phase, right, it needs to be synchronized the same, et cetera, right?
I saw that Mr. 930 put a comment in the 930 model channel saying that a PD array will